Hey guys, time for some weekend TA. I'll be covering several assets in this analysis, starting with DXY. So in my previous analysis, if you have watched the video, I was talking about two scenarios that I have continued to talk about for a while. The first scenario was my initial bias towards the downside that I still continue to have, that we are likely to get here. We haven't not got the confirmation yet. Even in last video, I was saying we haven't got the confirmation to move up. So I was looking at that scenario. And then I was also looking at a possible move up from here to 109 or 110 region. So both were on late at that time because I started considering the up scenario because we had this break on weekly time frame above this high. So now this will act as support. And then you can see it's acting as support over here. And then I was considering the down scenario still a possibility because of this distribution region that we have over here. So usually when we have distribution regions like that, they act as strong resistance and then possibly create a double top and then move down. So unless I see clear close above this particular high, up was still a question mark. So so the two scenarios were that we keep going up. So we just dance around here and then either we come to this point and then move down from here, or we dance around here, then we come to this point and then move up. So this is the week of 20th of May. So this is a weekly fib pull. So that means the weekly close is what's important. And within the week of 20th of May, we have CPI coming in. So that's an important economic data. And then we can see inflection and pivot around that time. So no, but things have changed again. I mean, as you know, technical analysis, we have to always look at price action and then update our biases and views. So when we came here, I was watching this formation. I was saying that if we just keep moving up and down here, and then we maintain the structure, it's likely we will move up. So what happened here is, if you watch closely, so this is an 18-hour chart. We went up and down. This is where we broke structure. So this is the first break of structure. So break of structures are like clear validation and invalidation points in price action. So just like this particular break of structure is a clear indication that we're going to try for the highs, this break of structure is clear indication that we are turning bearish at this point. So what happened after this is another confirmation. So after we broke below, we went on this ranging, and then this is, you can see this is Tuesday, 30th April. One day before the CPI figures were about to be announced, we pumped to the highs, and then this is the high that created this low. So this particular high was very important to be reclaimed. This is the high that basically broke structure. What happened is we went up above this and then we closed below. So just closing below is not a sign of SFP. What's the sign of SFP is breaking structure after closing below. So we broke structure over here. So this is the sell-off that happened after the CPI in the following days. And then we broke structure again. So we briefly broke structure to the upside here, turning bullish. And then after taking out this high, we broke below and then over here. So this is the break of structure again. So what this means is this SFP is confirmed. SFP of this high is confirmed, and this is a protected high now. What it means by protected high is we need significant push to actually break this high. Okay. Or we need significant consolidation over here to break this high. Okay. Or we need to hit some strong support like we are doing right now. So this is a strong support. This is a strong weekly support right now. So it does have a potential to break upwards. But what's not giving me too much confidence that it will break above is, so if you see, this is, I just put on Google, Fed meeting outcome, quantitative tightening. So you see, beginning in June, the committee will slow the pace of decline of its security holdings by reducing the monthly redemption cap on treasury securities from 60 billion to 25 billion. So this means that they are kind of doing the opposite of quantitative tightening. So if you remember back in 21 November, they started quantitative tightening. Now this is like the opposite of that. Okay, I think that's what caused this sell-off. And if they actually, I mean, whatever they say, they do. So I am guessing they will continue to be dovish in the following weeks and months. Now CPI can be something that can change that. So that's why I am still of the opinion that we should wait before calling any shots that to the upside or the downside. So let's say CPI comes in hot. increasing from the what we saw in the month of April, then it's possible that we might actually break this to the upside. It's just a possibility, although it's unlikely, because Fed's saying that they will start doing this from June. That means they know something. They don't. We as a retail investors and the world outside of Fed, they only know the data that Fed produces. But Fed, as in an organization, they already know a lot of things which is not yet released to the public. So they're saying that from June they will start doing this. So they must know that with some degree of possibility that inflation is going to be cooling down or at least remaining same. Otherwise, they would not be putting a statement like this. So it's likely that we will not see inflation coming in hotter than what we saw in April. It will plateau and then possibly start going down. So in that case, I see it very hard. DXY keeps going up to 109 and 110 from here. And then eventually, I think it will break this weekly support. If we get a weekly close below this, I think the game is over for DXY. And then the original Elliott wave count that I was looking at is invalid. So from Elliott wave perspective, let's look at DXY. Okay. So sorry, this video might get long because I will be covering several aspects and I'll be explaining them in detail. So, and I'll also be posting these charts in Discord so that you can skip the video and then just look at the charts. So this is the Elliott wave count I was looking at. Wave 1, I was looking at this 5-wave impulse, and then I also gave an argument in my previous video why I can reach this particular target by comparing the height of wave 3 and wave 1. So I was looking at this wave 1, 2, 3, and then I was looking at this particular consolidation as corrections. So you see, so this was like wave A, B, and then wave C. And after that, I was expecting this is a bull flag, that we get a move up from here. You see, this is a move up. If we do a measured move from here, already done, we should get around somewhere 108 or 109. This was my original idea. But then what happened is we broke below, and then it is still possible that this is sideways WXY correction. So in WXY, like we see a very complex correction. There is no clear ABCs. So in that case, what would have happened is DXY should have not broken this particular 1.618. This is the maximum it should have gone, but it broke below on a week basis. So now I really question whether DXY is likely going to go up. And if this is a WXY, I don't think it is a WXY anymore. It doesn't fit in that pattern. So what I'm looking at this is as we delete everything. I'm looking at this as a start of a new impulse. This does look like an impulsive move, pretty strong move. So this is like wave 1. We get a correction back up to on this day, not this day, like let's say on the CPI day, and then we start dropping from there like this. Okay, so this is what I'm looking at now, seriously. And what is the clear invalidation of this scenario? So this SFE, as I was explaining, that this is a protected high now. Any close above this on daily time frame, this is likely to shoot up pretty high, 209 and 110 after that. Okay, so that's one good thing about this particular SFP, that we know a clear-cut answer now. If we start seeing closures above this, DXY is going for the highs, 110, and then from there possibly down. But now this is a higher probability scenario I'm looking at. We just start moving up in an ABC corrective fashion to the week of CPI and then move down. I also drew out some additional, let me delete this, let me label all the Elliott waves. Okay, so this is like just a speculation for my original analysis that I posted with a few months ago, that I want to see this particular region tapped. So what I think is likely now, this count is invalid. We are not going to see any more 5 impulse up. So this is start of a new wave. So what we see is from here to here, you come back to 618 or 786 region, like 105 or something. Then start moving down. Okay. Like this, we come here, close a weekly candle below this, and then move up, retest this as a resistance, and then extended wave 5. Now, once we tap this particular region, we do have something for this ABC correction back to the 618 of this whole drop. So we do have, let me see. Okay, so we do have a cipher over here. So this, not expecting this to happen over here. Let's see. Okay. We do have this bullish cipher, which can cause a pump again and then take us to this point. Then we start another 5-wave impulse move down from. Okay. So that's what I think about Dixie. What's likely to happen to Dixie in coming weeks and months. And these are the dates, inflection points for Dixie. And this particular date is very interesting. So you see, as we approach the year end, and then if inflation doesn't go high and remains at the same level or start going down, we will actually start seeing the rate cuts coming in. Now, rate cuts, if they start coming in, we will see Dixie even going down even further. So I am expecting the rate cuts to come in during the Q4 of this year, the first rate cuts. So I mean, from that perspective as well, if we move up from here, like in August, and then back in October, we should see Dixie move down after that. So that's what I see with respect to Dixie. Now let's move on to SPX. Okay, let me hide. There are so many waves here. We have unnecessary things that we don't need to see. Okay, so this is the most beautiful 5-wave impulse. If we analyze the chart based on Elliott wave, this is wave 1, 2, 3, 4, and this is extended wave 5 over here. Now, if we use Elliott wave, what we do after wave 5, we actually look for trades. Okay, we wait for these corrections, A, B, and C. So this is where you usually get into a trade to target the end of wave C. So that's what I'm looking at. So I'm looking at this particular move as wave A, and then this is wave B, and then I'll target wave C. I'll TP around here. So I'm looking for a short over here. I think a lot of people, even Brendan, is looking for a short over here. But yeah, this is the most logical place to get into a short. So this is 61.8 resistance over retracement. That's very common for wave B to retrace here. In case it is extended wave B, we can go till 786 of the whole move. So if you do get into a short over here, your invalidation, your stop loss should be slightly above this, like 5250, something like that. Okay. Yeah, so that's what I'm looking at in terms of SPX. So, and we do have additional confluence here, right around 618. We have this Gartley right here with the PRZ at 15176. I mean, that's the ideal place to get into a short with a stop loss above the 786. And well, why I think that it's possible that the SPX move up slightly above here, because we do have this inefficiency here. And in the history of SPX, whenever double tops form, it tries to basically recover all the inefficiencies. So all the inefficiencies from this top is almost recovered. This is a big one, is still left. So we might see SPX recover this part and then drop from the POC. So this is also an important place from where SPX can reject hard. So 5205. So just keep that in mind. So if you are shorting over here, your stop loss should be at least like 20-30 points above the POC. Okay. So that's what I'll be doing. So if I get into a short over here, I'll be putting my stop loss above this particular. And then my target would be this zone, 4769. Why? Why? Because you can see it has a structural support over here. You can see this is, this was the prior high, prior SPX high. We have a huge structural support over here. From this perspective, as well as we do have this rising parallel channel support over here. And if I just do this EMAs. So yeah, so this 50-week EMA will also fall around this particular region. Right now, SPX bounced from 20 weeks EMA. And then I'm expecting a rejection here and drop to this level around 50 weeks EMA. So if you get into a short here, this should be your target. That's it. And but you always have to watch for how SPX is moving from here to here. let's say we drop here a bit and then we start moving up and then break structure back to bullish. Again, we're not going here. We will go for the highs. And same thing for NASDAQ. I think I posted this in Discord. I am looking this move as a wedge. So you can see this is a rising wedge. And then if you draw it like bear flag, if we break down. So this should be your last TP, but I should, yeah. So we should basically take a major TP over here, but this is a structural support. And then if we go down, this should be the last TP. I think, yeah, we're not going down below this level. What we'll most likely do is we'll possibly start forming some kind of bottom here and then move back up. So that's NASDAQ and SPX are pretty similar. If we are to count the 5 waves impulse wave up, we'll find the same 5 waves up on weekly time frame for NASDAQ as we did for SPX. So no point analyzing SPX, NASDAQ from that perspective. The only thing is like we should be looking at the level where to get into a short. So this is my short entry, like 18,020 or 18,060. That's where I'll get into a short. And this is my invalidation, same as for SPX, above, like a few points above the 786. Okay. This is from the perspective of the setup. But if we start looking this from perspective of Elliott wave analysis, the corrective wave up can go as high as this particular high, and then we can just range here for a while. That's called WXY correction. That is still a possibility. But this is a higher probability play, so I'll be taking this short. Now let's finally head back to Bitcoin. Okay. So if you have watched my previous Bitcoin analysis video, I was telling that if we break below this particular low on daily time frame, we are likely going to enter a very long correction over here, multi-month correction over here. That's that. I'm still holding that opinion right now, even when we had like this strong move. But now I'm not looking at this strong move as anything else, just the retest of the value area low of prior range. So if you look here, so a lot of people don't know how to actually use volume profile tool correctly. They'll just draw the volume from here and just look at value area low and high. That's not how you should look at, because all volume is not the same volume. There is a characteristic attached to each volume, each type of volume. So how much selling is involved in a particular volume, type of volume, how much buying is involved in a particular type of volume. So we have to look at that. So all this volume from here to here is most likely bullish, because we actually maintained structure above this particular low. So at each high volume node, there was more buying compared to selling. So if you were retracing from a top and falling onto a high volume node, we are likely to see support over there because we are bullish in this region. But what happened over here is we broke structure right here. Okay. And then we started falling down. So the volume after this is a different kind of volume. There is more selling involved at each high volume node compared to buying. So that's why I drew a different range. So this is a new range that we have over here. So I did not include this price action to find my value area low and high, because this is a different type of price action that we are seeing over here. It's a bearish price action after this. So right now you can see we dropped below and then we came up and then we are rejecting from the value area low over here of the top range. This is the value area low and then we are rejecting right from there. Unless and until we start closing back in this value area low, there is no question about going to the highs. From structure perspective, what I want to see is a close above this place, 65,800 or something. If we start seeing a daily close above this particular place, this place, yeah, 66,200. We start to see daily close above this, we are going for the highs and likely higher after this. Yes, so that's one. We are basically rejecting from the value area low, and we are also rejecting from the POC of this particular range, the lower range right now. I have taken a short because this is the most logical place to take a short. I took short over here. I took a short. I attempted a short over here. They did not real much result. This was a fail, but I'm expecting a move down from here. Now let's say this is the bottom. Okay, let's say this is the bottom. and then we are likely to move up from here after a retrace. So what I want to see is, I want to see this green box head. I don't want to see any closures below this green box. So let me even make it. Yes, this is. So I don't want to see any closures below this on daily time frame. If we start closing below this on daily time frame, I think this move is over, and then we will go lower. Okay, we'll go lower to the lower targets, around 52K, something like that. Okay. And why I expect that this particular that we will start moving down from here, that we have hidden bear developing on 4-hour time frame. You see, this is RSI is making a higher high, but we're making a lower low on the price action over here compared to this high. Okay, so we should see some correction over here to at least back to this particular area. I mean, all this will go, and then if we are bullish, I want to see a higher low over here and then break this channel, and then close above this particular level. If we start doing that, then yeah, we're going for the highs. But yeah, I don't see that right now. Okay, so that's all I had with respect to the Bitcoin charts. And but I wanted to cover one additional thing. I found this chart on Twitter. So if you want to know from got this chart, this is the guy. He posts very interesting matrices for Bitcoin and other assets. You can follow him. So what I see is, what he has done is he has counted number of bars on weekly time frame. Okay, from the bear market low to halving, and then from halving to the next high. Okay, so you see here it took like 75 bars from bear market low to the halving, and then from halving to the high it took 73 bars. From bear market low to the halving, 74 bars, and then 75 bars to Bitcoin high. So bear market low to the halving, this is 73 bars. So we can and I think I kind of agree with that analysis. If we are going to drop even lower, okay, here we can come up as this particular region and then drop even lower to 40K. If you watched my previous video on Bitcoin, I've explained that there is a possibility that Bitcoin might drop to 40K before going for the new highs. And in that case, when we do such a lengthy correction where we go to the 40Ks and stay there for a while, the new highs are going to be pretty high. They're not going to be like 80K or something like that. They're going to be pretty high. They will be in deep 100Ks next year. But if we don't do that, if we just come here and then start going up, I think we will reach the Bitcoin highs in 80K region, 80 to 85K, and then that's it. That's over for this particular cycle. Cycle is over. We start the bear market after that. Okay, so that's all I wanted to cover with respect to analysis of different assets. If you do want me to cover any other assets, do let me know in Discord. I'll try to post on that on my page. Okay, thank you everyone.